Up, Internet? My name's Ian Bloom. Welcome to Nerd Finance. I'm your resident financial life planner and huge nerd. Today we're going to be covering a pretty dense topic, so I'm going to move quickly through it. We're covering emotion, investing, and probably a little bit of Batman. Financial education, not financial advice. So let's dive right in. Like I said, we have a lot to cover today. Humans are basically the worst at investing. We have fear and greed, and those emotions trick us into thinking we're making logical decisions when we're actually making decisions that aren't in our best interest. To illustrate that, let's talk about driving. So, you're driving down the highway and you are the Batman. Congratulations, you are the hero that Gotham needs, and you're on your way to stop a crime. However, you're also in rush hour traffic, and even the Batman can't make traffic move. So because of that, your lane is in a dead halt. The lane to your left starts moving. You immediately get into that lane, and then what happens? The lane that you were in starts moving, and the lane you're in now stops. This is very, very typical, and it actually works a lot like the stock market. Basically, if you hear news about how well a stock has been performing or how well an investment did for your friend, you're already behind the eight ball. That investment is going to have an increased price because of its recent performance, and you'll be buying high if you want to purchase it. And this will severely hamper your returns. And worse, what if the market then goes down afterwards? Well, you bought high, and because the market is going down, you're losing money. So your first instinct is to do what? Pull out of the market, right? Well, by selling that investment low, you're actually locking in your losses. And that's a problem. And see, these are where fear and greed come in. Greed comes in when you want that investment that's doing so well because you want that extra money. And fear comes in on the other side when you are so scared of losing money that you sell out of the investment you just bought. So, how can we help? Well, advisors and planners have been shown to help this sort of thing. In fact, Vanguard completed a study called Advisors Alpha, which measured the benefit that clients were getting from working with advisors. And it found that advisors tend to increase a client's return by about 3%. Now, you might ask yourself why. Is it because advisors have this amazing investment strategy or can typically outperform the market? And the answer to that is absolutely not. We're not very good at that. Nobody really is. It's incredibly difficult to do. But what we do is help with behavior change. So if you're a client of mine and you call me going, "Oh my God, Ian, the market is down so far, we got to pull out," my first question to you is going to be why. And even that little bit of pushback might make you reconsider. Now, ultimately, you are my client and you have the right to tell me what you want to do with your money and all that kind of stuff. It's your decision. But by having that counsel and that extra person who's going to logically look at your portfolio and talk to you about it, most clients tend to make better decisions. So anyway, in summary, we invest like we drive. We're not very good at it because of fear and greed. Humans are generally bad at investing. You might be the Batman, and on top of that, advisors can help. So if you're looking for help with this sort of thing, feel free to go to my website, reach out. Otherwise, I hope you enjoyed the content, and I hope you have a wonderful day.